Good morning and welcome to First Mover, your first global look at today's action in Bitcoin, blockchain, and digital assets. I'm Jen Sanasi here with my co-host, the TIE Director of Content, Lawrence Lewitton. Good morning to you, Lawrence.
Good morning.
Wonderful to see you this morning. Let's
Happy to see you.
Let's take a look at what's going on in the markets, starting with Bitcoin. All right, the CoinDesk Bitcoin price XBX index is currently at $29,225. Not much has changed since yesterday. Bitcoin still holding steady around that $29,000 mark. Let's take a look at Ether. The CoinDesk Ether price ETX index is at 1,855. Again, not much has changed since yesterday. Let's see if there's any movement when we look at DeFi assets. The DFX, CoinDesk's DeFi index, is at 122. Not much movement there either, but an exciting market is not always a good one. I learned that from you, Lawrence.
Yes, exactly. Usually when it's exciting, it requires a lot of Pepto-Bismol, things like that. But what is going to be exciting, super exciting, this is the most exciting thing on the calendar today, of course, is the Federal Reserve. The markets are expecting the FOMC, the Federal Open Market Committee, to raise rates by 25 basis points. But is it going to be one and done? Joining us now to discuss what it could mean for the crypto markets is Head of Growth and Capital Markets for Maple, Quinn Thompson. Welcome, Quinn.
Hey, thanks for having me, guys.
Glad to see you. So, one and done. That's been kind of the consensus. I'm not buying it. I haven't bought it at all. Jen can tell you how annoying I've been about this.
It's true.
We've seen. You look at the Fed Fund futures market. It had a 25 basis point hike now, but going forward for a while, nothing else. That's kind of starting to change. What's your take?
Yeah, look, Lawrence, the market's been consistently mispricing the Fed hikes to the downside this whole hiking cycle. And really the low-hanging fruit in the battle against inflation has already been harvested. So just alone this month, you have oil up 16%, pushing against year-to-date highs, agricultural commodities up 6%, pushing against post-Russia 2022 invasion highs, and now housing has found a bottom and turning higher. So if I'm Jerome Powell and I believe my measure of success is getting inflation back down, I'm not comfortable. And this isn't just a Jay Powell thing. The Fed just doesn't have the tools to fight inflation when the fiscal spending is this far out of control. And so there's a big circular problem here, because each time they go to hike rates, they're actually putting the fiscal side further into deficit, which causes more money printing. And so this is called fiscal dominance. And on top of that, you have Yellen and the Fed basically doing de facto yield curve control, the BTFP facility in March, and then Yellen's shift to short dated bills to refill the TGA, the last couple of months has kept long bond yields capped. And that's exactly what they need to work through the economy to kind of bring down the exuberance. So, it's hard to see the economy falling apart at these spending levels. And, I just think the Fed has a lot more room to hike, particularly because looking at these forward indicators, inflation is actually turning higher.
I can't believe it, because there are all these geniuses on all the business channels telling me that the Fed has no credibility, and of course they're going to just cave because that's just the way things are, and buy my newsletter and whatever and all this stuff. So you're telling me those guys are lying to me? Have I been lied to? Oh my God.
I think the backward-looking CPI indicators, aren't the best judge of forward-looking markets.
So speaking of forward-looking markets, we had WorldCoin go live this week. 10 billion, fully diluted. This is 10 billion coins outstanding that will come to market. So that puts the fully diluted value at something like 20-something billion. I think it makes it more valuable. If that's the case, it's more valuable than Dogecoin, which is shocking. Slightly less than USDC. It would be a top 10 coin, assuming people are paying attention to. Is that really what's going on? I mean, are people paying attention to the fully diluted value of WorldCoin and are pricing it correctly? And what does this all mean?
Yeah, look, I'm not the expert on the WorldCoin topic.
No one is.
The fully diluted valuation's been a heated debate in crypto for a while now, and it all really depends on when that supply is going to hit the market. A strategy for a number of large projects over the years has been to issue a very small portion of their total token supply, which if you're looking at purely flow and technical dynamics, might inflate the price, but I don't think anyone really believes that that's a fair valuation in this market for something that doesn't quite have a product yet, to my knowledge, or at least adoption and scale. Yeah, so it's one of the things I think when markets start to get choppy here and lose the upside momentum, you start to see things like this also really kind of hurt liquidity. And there's a number of other large multi-billion-dollar tokens that'll be hitting the market over the coming months. And there needs to be supply and capital to digest those onto the market. And so it makes me a little cautious.
Quinn, you say in your notes that the market is desperately clinging to this Ripple and ETF news. Talk to us about your outlook on the ETF and how you think the market's going to react as we move forward to a decision in maybe hundreds of days, maybe tens of days, who knows? Yeah,
the reality is, we've had a nice boost year to date. The first half was quite strong for all tech assets, NASDAQ, Bitcoin, everything. But the underlying problems are still there. Stablecoin total supply is continues to make new lows and decreasing. Capital inflows to the space, to VC, to other sorts of investment vehicles just aren't there. There's been, fits and bouts, but it hasn't been consistent. And so the fact that there was no follow through post, the Ripple announcement, which came after the ETF hysteria, it just shows there's still, despite the positive catalysts on the horizon, there's still not, those big tailwinds kind of coming into the market on the capital side. And so on the bright side, I think there's some very interesting opportunities that, particularly if the sell-offs continue, will be created. I'm very constructive on the ETF personally happening. Not that it's going to happen in 30 days or less, but the fact that we're getting a timeline that's even 3 to 12 months away versus previous to the BlackRock and rest of the filings was probably 12 to 24 plus months away. And so that's a big deal. And I also think, the precursor to that is going to be this Grayscale versus SEC decision, which if Grayscale wins is basically the ETF approval in itself, in my opinion. And I think you see those trust assets close that discount gap effectively overnight.
And how do you think markets are going to react once that ETF gets approved, if it gets approved?
If that's a big if.
I said once, and then I said if.
No, I'm just saying you seem pretty optimistic.
I am optimistic. I think Gensler's clearly two L's in a row, where you have the Ripple news, which everyone kind of is like, can't believe that they lost that, and then just the momentum here on the ETF side, the fact they're acknowledging the applications and providing feedback. The signs are there, and even on both sides of the political alley, we're seeing presidential candidates, congressional candidates being supportive of the industry. So I think he needs to let off the aggression a little bit, and the easiest way to do that is a Bitcoin ETF. And the reaction following, it all depends on what the market does, leading up to that moment and where things are. I think now that we've backed off a little bit and there's been some consolidation here, I would imagine an ETF would continue to power us, as that creates this more efficient vehicle for investment capital to flow into the space. And it also, I think, could align quite nicely if inflation starts coming back. We start seeing gold rallying and Bitcoin kind of following that. So I'm optimistic. I just think there's some hiccups to work through here on the liquidity and macro side.
Unless Gensler was beat up in the schoolyard as a kid and he's getting out revenge now. So I think there are a lot of other factors going on here.
That's right. I mean, if his political aspirations are still there, and then you have, Democrats and Republicans now being supportive, you kind of got to come to the table.
All right, CoinDesk TV will take Fed Chair Powell's press conference live at 2:30 p.m. Eastern Time following the Fed rate decision. Quinn, thanks so much for joining us this morning.
Yeah, thanks for having me. Take care, guys.
Thank you.
That was the head of growth and capital markets for Maple, Quinn Thompson. All right, we are going to turn over to some regulation now. A judge is considering banning parties and witnesses in the FTX case from speaking to the media. Joining us now to discuss is CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk's State of Crypto newsletter. Good morning, Nick.
Good morning.
All right. Sam Bankman-Fried is expected in court today. What is likely going to happen when he gets there?
Yeah, so this stems from a letter last week that prosecutors sent alleging that he had leaked former Alameda Research CEO Carolyn Ellison's private diaries in an effort to try and discredit her as a witness. The judge has scheduled a hearing, and among other things, he said that both parties should be prepared to discuss the continued adequacy of his bail conditions, potentially suggesting that, if he's not happy with what he hears, he might, seek changes on Sam Bankman-Fried's current bond release.
This is something out of TMZ, who's sitting there leaking.
This keeps getting more and more dramatic.
Yeah, for the kids who don't know, what exactly were in those diaries, other than like OMG, I can't believe Sam looked at me today. What else was going on in those diaries?
Yeah, I mean, there were details about Ellison's previous relationships with Bankman-Fried. Other details just talk about kind of more her perspective on running the company, about her concerns with, the operations and what she was doing, and also her ability to do it. So, Ellison, of course, seems to have pleaded guilty a couple months ago to DOJ charges and settled. And part of that plea agreement seems to suggest that she's going to be, a key witness in Bankman-Fried's own trial, which kicks off in October.
It doesn't sound much like. Yeah, I was just going to say it doesn't sound much like damning her. It seems if he were to leak it, it kind of makes him look like a tool.
Well, yeah, Lawrence, I'm happy you brought that up, because Nick, can you tell us why this is so important to the trial? What does the leaking of these diary entries actually mean? Could it taint potential witnesses in the future? What's the contentious point here?
Well, not the witnesses so much as the jury, right? If you're looking for a jury that, you want to see as neutral, then, potentially having something come out in the New York Times saying that, by the way, one of the witnesses, A, was romantically engaged with the defendant, B, was heavily involved in the running of this company, and then C, she had all these, things that she was thinking about and talking about, and, maybe the jury's going to think, okay, well, perhaps, she was not really paying attention to the actual issues or to what Bankman-Fried himself was doing. Maybe she's an unreliable witness because of, XYZ. So there's a couple different concerns that I think prosecutors will have. Of course, the defense team, Bankman-Fried's lawyers, have also come out and said that, by the way, this whole thing is being tried in public anyway, and they in particular took umbrage at the fact that the current leadership of FTX has made a couple, let's say, statements about how badly FTX was run under Bankman-Fried. So it's a concern that the defense has acknowledged, although clearly their actual concern and focus is on a slightly different aspect of it.
And lastly, Sam Bankman-Fried is set to face trial in October. There's 8 criminal charges against him. Talk to us about how today's hearing is going to impact what happens in October.
So the big thing is the concern about bail conditions, and then the actual, topic, the proposed order on discussing details of the case in public or with the public or disseminating in other public communication media. We might see a little bit less information from, news articles about what prosecutors and the defense team are thinking. On the other hand, it seems pretty well set that we know what we're looking at. The open questions now are things like, the witness lists, the, actual timeline for everything, details like that will be shared. The these are things that the prosecution and defense will have to agree to and share with the judge, and the judge will sign off. So all of that will still be public, but we might just hear less about the kind of behind the scenes thinking that we've seen so far.
All right, Nick, thanks for joining the show this morning. Always a pleasure.
I'm glad my diaries haven't come out, by the way.
There's still time.
Today I made a joke about the tragically hip to Jen. It didn't go over well.
It went over just fine. Now I'm waiting for the Nickelback joke.
That's too easy. Besides, they're from Kelowna. They're all the way. They're all the West Coast. They're West Coast lousy rock. Tragically hip's more East Coast, right?
Yeah, tragically
Ontario.
hip is definitely East Coast. I didn't actually know Nickelback was on the West Coast. Come for the crypto news, stick around for the Canadian pop culture.
Yeah.
Nick, thanks so much for joining us this morning. That was CoinDesk Global Policy and Regulation Managing Editor Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. We're going to take a quick break. Stick around. Maybe you'll learn a little bit more about some Canadian pop culture after this break. Good morning and welcome back to First Mover. Bitcoin's fourth halving is slated for next April. So what does this mean for miners? CoinDesk's special mining week presented by Foundry is taking a closer look at the current conditions around equipment, energy use, and diversification. Foundry and CoinDesk are both owned by DCG. Joining us now to discuss is mining analyst Anthony Power. Welcome to the show, Anthony. Thanks for being here. Thanks for participating in Mining Week. You wrote an article for CoinDesk all about this topic. So tell us about some of the key takeaways. Are you still with us, Anthony?
Yes, I can hear you.
Oh, there you are. So tell us about the article that you wrote for CoinDesk, some of the key takeaways.
Yeah, it wasn't the first article I've written on the halving. I also write content for Compass Mining, and I produced an article of them a few months ago. We're approaching the halving in April next year, and this will be the fourth halving. The first block Bitcoin was mined in January 2009, the Genesis block. And every 210,000 blocks, we have a halving. And so the miners who were mining back in 2009 were receiving 50 Bitcoin for every block they successfully mined. And that reduced to 12.5 in 2012. In 2016, that became 6.25. And we're going now to, in 2024, the rewards will be halved to 3.125 Bitcoin. And that means that, miners who are mining now, when that date comes, if the Bitcoin price remains as it is at the moment, we'll potentially see, their rewards halved. And effectively, that means that, that your costs have doubled effectively overnight. And so my article looked at the ways that these mining companies, and I analysed the big North American public miners, but this will apply to all miners. This will apply to all miners globally. What the things that they would be doing, I'd be expecting to do between now and the halving itself. And I came up with 3 or 4 different points.
So I have to ask this because we've known about the halving since literally the day the white paper was released. We've always known this was coming. But people seem to think that this is going to be some sort of bullish event, as if nobody has ever heard of it, or that the retail public hasn't heard of it. It seems like this happens every so often. We hear about, if you just look at a chart of Bitcoin, the price of Bitcoin, and it halves, and therefore the halving is what causes the price to go up this much. But there are other factors, right? There's the network effect of people adopting or people trading Bitcoin, at least. Is this really? Is this correlation? Is this a spurious correlation with price, or is this an actual? Is it causation? Because it just seems so, obvious.
Yeah. I personally believe that miners will be looking back at the previous cycles to determine what's happened, and we have seen some consistency with the actual with the halving itself. One thing that has been clear: the Bitcoin price hasn't always increased overnight in line with the halvings being reduced. So one of my key points that miners should be looking at now is making sure they have enough financial runway to get them through at least 4 or 5 months after the halving. And usually by that time, the Bitcoin price has sort of like started to move. But as you quite rightly allude to, there are so many other factors that can affect the Bitcoin price. And we've seen that happen even in the last few years with regards to, macroeconomic factors, the war in Ukraine, and, so many things can affect Bitcoin. But it does seem to have that resilience. And even though there are many factors trying to bring it down, and you've talked through various of these on your channel before with the likes of FTX and Celsius, Bitcoin just seems to bounce back. It seems to be strong enough to take those challenges on. But from my perspective, I'd be expecting Bitcoin miners to making sure now that they have the sort of the most efficient mining machines in preparation for that halving, because you want the most efficient machines that use the least energy, knowing full well that you're going to get half the rewards. The second key point is really, the energy cost. We've seen energy prices come down since 2022, and we've seen a number of miners who've been able to lock into fixed price contracts, and that's going to enable them to help manage the situation. The cash runway is absolutely essential. These miners need cash to pay for their electricity, to pay for their staff's wages, to pay for their G&A costs. So that's important as well. We're seeing a number of miners starting to diversify into high performance computing, artificial intelligence, hosting other mining companies. The first two, we've seen the likes of Hut 8 and Hive Digital move into that area, and Iris Energy, an Australian miner with currently based in the US. They're also considering using some of their capacity at the Childress site to use it for data centers. my only concern with that diversification is it sounds great at the moment, and we're hearing artificial intelligence mentioned in every other sentence. I just want to make sure the revenues actually follow those discussions and what they're implementing there. These are Bitcoin mining companies, and whatever they do as a sideline, there'll always be Bitcoin mining companies at the moment. I've spoke to some of the CEOs, and their expectation of revenues. This will not really impact significantly on what they're doing from a Bitcoin mine perspective, but it will bring some supplementary revenues and some reasonable margins potentially. So, it is something for consideration, because we don't know how long Bitcoin price will stay at this level. I can't predict the Bitcoin price in April next year. You can't predict the Bitcoin price. I can't predict the Bitcoin price tomorrow. So, that's
welcome to the club.
I want to touch on that diversification.
I never want to hear anybody ask me. They're like, well, you know anything about it. I'm like, just leave me alone.
Absolutely, Lawrence.
Stop, please.
I'm making a mental note to ask Lawrence that now every day.
Dare. I'll ask you about the Canadian dollar if you keep that up.
Anthony, I want to touch on that diversification piece a little bit more. It sounds like the mining industry is really solving a lot of the challenges, but it's becoming increasingly more difficult to mine, and hence the diversification. Do you see a lot of the miners that are operating now, diversifying completely into a different business as time goes on, as mining becomes more difficult? What are you hearing from the CEOs that you're speaking to?
The two companies that are sort of really looking to move into that space significantly, and the two I mentioned were Rotate and Hive Digital. Bear in mind, these two companies had a serious amount of GPUs when they were mining Ethereum before we had the fork last September. So all those fantastic revenues they were mining Ethereum with their GPUs stopped overnight. And they've then been looking for the next thing to do with those GPUs. Now, the GPUs that they have, I think they're high-end GPUs, so they've got plenty of alternative uses. I mean, a Bitcoin miner, an ASIC machine can only do one thing. It can mine Bitcoin, and that's it. But the GPUs have got other uses, and I think they're looking to sort of like move there. Will other miners move into that space? I don't think so at the moment. I think the big mining companies, the Marathon Digitals, the Riot platforms, will continue to grow. CleanSpot, add them to that top tier group of miners. They'll grow their hash rate in a sensible way, buying the most efficient miners on the market. And those three companies I've just mentioned, they've been buying miners this year and last year in readiness for this halving, and they've got serious hash rate ready. So diversification, not in terms of other revenues, but diversification in terms of looking to Bitcoin mine in other areas of the world. And Marathon Digital are already up and running in the UAE.
So, but to that point, I mean, would we see, for instance, Litecoin? You said that they can only mine Bitcoin essentially, but there are all these offshoots of Bitcoin that essentially run the same way. Would we see, as the price of mining Bitcoin goes up, this idea that, well, you know what, we're kind of set up. We could mine BSV, we can mine Bitcoin Cash, we can mine Litecoin. We can kind of go to these other coins that sort of use the same technology essentially, and it's costing us a lot more now to deal with mining Bitcoin. Why don't we just switch to that? I mean, like, who's going to suffer? Who do you see suffering the most with the halving?
The ones that suffer the most will be the ones that haven't prepared. So they haven't got, they've got machines that are going to require a lot of power. So not the most efficient machines on the market. And, you need to, the machine prices at the moment are actually quite low. Go back 18 months ago, people were paying 7 or 8 times the current price of what they're paying now for machines. And a lot of these mining companies did buy at 7 or 8 times the price, and they haven't got the cash revenues now to really start looking to change the older machines for newer machines. There's not many levers available to mining companies. They can sell Bitcoin, and most of them are selling Bitcoin every month now. Gone are the days where we're hodling everything. There's debt, but debt's becoming far more trickier, and 2022 was the year of debt, and we saw quite a number of miners. Some went into Chapter 11, and some nearly went into Chapter 11. So debt really is off the table for most of the miners. And the other option is to dilute the company, so to sell more shares. And 2023 will be the year of dilution for most of these companies.
Well, you want to name names?
Well, I can tell you now that CleanSpark, Marathon Digital, Riot platforms are all selling shares. CleanSpark will tell shareholders are selling shares. They want to grow their hash rate. They've grown exponentially in 2022. They were the only miner to achieve their growth target in that year. They've got a growth target which was about 6 exahash in January this year. It's going to be 16 exahash by the end of the year. That's phenomenal growth, but that requires phenomenal investment. And you can't tap into the debt markets at the moment because the interest rates with the macroeconomic climate and also the climate around what's happened in the debt cycles in the mining industry, where we've seen a lot of defaults on loans, we've seen a lot of repossession of loans, we've seen a lot of issuers of debt fall on their face because they've not really looked into this too seriously and looked at how the price of Bitcoin not only affects Bitcoin itself, but it affects the actual machinery. So when Bitcoin price comes down, the cost of these machines, the value of these machines come down as well. And that wasn't anticipated by some of these lenders. And so, they've also fallen foul of what they tried to succeed in. I think I cover 15 or 16 of the biggest miners, and I would say categorically that 90% of those are diluting, regularly now. They've all got these at-the-market offerings, which enables them, and they're approved by the shareholders, so the shareholders have to approve the at-the-market offering. They can sell shares effectively on a daily basis. And you don't know how many shares they've sold until the quarterly earnings report comes out, and that's generally 5 months after. So in the next 2 or 3 weeks, we're going to see earnings reports from all these miners we've discussed, and we'll see exactly how many shares. And just as CleanSpark,
looking forward to that.
Highlighted what they what they've done the first 5 months of the year. They sold 41 million shares in the first 5 months of 2023 to help fund their growth.
Anthony, thank you very much for that. You can read Anthony's full article on CoinDesk.com. Thanks for joining the show this morning. That was mining analyst Anthony Power. Don't miss CoinDesk's Spaces today at 11 a.m. Eastern Time. That's all about mining week and hedging for the upcoming Bitcoin halving. You can find that on X, also formerly known as Twitter, but funny enough, still available on twitter.com. We are going to take a quick break and we'll see you in a little bit.
The State of Crypto is presented by Tron, connecting the world to the power of cryptocurrency.
Good morning and welcome back to First Mover. Senators Cynthia Lummis and Kirsten Gillibrand recently unveiled a new version of their bipartisan crypto bill, which could define more of the conversation around digital asset legislation. Joining us now to discuss is Wyoming Senator Cynthia Lummis. Welcome.
Good morning, Jen. It's nice to be with you.
It's wonderful to have you on the show. Let's get right into the bill. It includes an updated consumer protection along with granting the CFTC clearer authority over crypto issuers. Tell us about bringing the bill back around, why you feel it's important at this time.
I think it's particularly important at this time. This is still a growing industry. It's maturing, it's fleshing itself out. Some of the bad actors are no longer on the scene. We took the lessons learned from that and incorporated them into the latest version of Lummis Gillibrand to beef up the customer protections, to make sure that there are sufficient assets backing these crypto assets, to make sure that there's adequate disclosures. It is a more robust regulatory framework, but it still is very focused on innovation, which is what we want to pursue in the United States.
Senator, I'm going to ignore the fact that you said hello to Jen and not me, and I'll just pursue this question. You of course, this bill also, I believe you're tackling stablecoins as well here, dealing with federal and state regulators, regulated banks. How does this differ from what's going through the House right now with Patrick McHenry's bill?
Well, to my knowledge, the last version of Patrick McHenry's bill that I saw was a little broader in terms of treating algorithmic stable coins. And Lummis Gillibrand does not allow algorithmic stable coins. But I want you to know I'm supportive of the House moving forward. I'm delighted that this is the week that they've chosen to advance their legislation. I think that it will be followed in the House Ag Committee by legislation authorizing the CFTC's broad authority in the area of digital assets. So having these issues move in the House, I think, is very important. Going without regulation is the problem. It's a problem for both the consumer and for the industry. Because, for example, if you go right now to the SEC and ask them, what do I need to comply with in order to participate in a Securities Exchange Commission regulatory framework, you're apt not to get an answer, but you could get slapped with a regulatory action and enforcement action that involves tremendous penalties. So even the industry knows that it needs rules of the road. And that's what Lummis Gillibrand provides, that framework.
Senator, what's the biggest pain point or the biggest challenge that you would want to get resolved right now when it comes to crypto legislation? There are so many things that have presented challenges for this industry, but what's the one that's at the top of your list?
Well, the one that I'm working on literally this week is the illicit finance component. Among the things that we hear, Jen, in the Senate from skeptics about digital assets is that they're really only useful for sanctions avoidance or for criminal activity and terrorist financing, which of course is not true at all. But we have to get over that hurdle. One way to get over that hurdle is what we're doing with the National Defense Authorization Act, which is being debated on the floor of the Senate this week. We've proposed an amendment that incorporates the illicit finance component of the Lummis Gillibrand bill into the NDAA because of its tie to illicit finance in the area of sanctions avoidance and terrorism funding. If we can get that in the NDAA, it helps take that issue off the table, because whether you're pro-crypto, anti-crypto, or crypto neutral, Nobody wants to see it used for illicit finance. So we want that discussion off the table. And I think we might be able to get it off the table this week. Both Kirsten Gillibrand and I have worked with Elizabeth Warren and Roger Marshall, who have a bill on illicit finance related to digital assets. And we took some of their ideas and folded them into this amendment. So they are both supportive of it, and Senator Gillibrand and I are supportive of it. So you see people that are covering the spectrum of views on digital assets overall, supporting this illicit finance addition to the National Defense Authorization Act.
Aha, you do work with Elizabeth Warren. Now, I've got to ask this about why, let your opponents know this. But of course, you're defining DeFi. How are you doing this exactly? How are you able to define DeFi in your bill? What are you going to do with it? And how are you able to regulate it when the whole point of it is that it's sort of decentralized? There's nobody you can really, haul in for questioning or regulation.
Well, that's a great question. And of course, if someone, for example, is transacting with Bitcoin for everything they do, and they do not interface with the United States dollar, then they're not going to be subject to the regulation in this bill. But if someone is interfacing in any way with the United States dollar, then they're going to be subject to this regulation. And a lot of the regulations are already applicable to the U.S. dollar, things like the Anti-Money Laundering Act, the Bank Secrecy Act, the Know Your Customer provisions, and other things that already apply to financial institutions that are dealing with U.S. fiat currency. So if you interact only with other digital assets and never interact with government-issued currency, you're not going to have to deal with any of these regulations. But even if you're offshore and you form, for example, a custodian that's offshore, like Binance, is going to have to interact with this U.S. law if they intend to in any way interface with the United States dollar.
Senator, have you seen any indication that there's a genuine effort to launch a CBDC here in the U.S.?
Well, I hope not. And if there is, I hope it only deals with the behind the paywall Federal Reserve relationships with banks and with other Federal Reserve banks around the world. I do not want to see a direct-to-consumer CDBC in the United States. That's what a stablecoin is for. A stablecoin is for the purpose of interacting with the direct consumer. A CDBC needs to be behind the Fed's work with other Federal Reserve banks. Otherwise, a CDBC in the United States could be used for the same type of surveillance that the digital yuan is being used for.
Are you going to subject yourself to the WorldCoin orb? Are you going to stick your eye in that thing, or you know what I'm talking about? Are you guys doing that? Yeah, you're going to do that? Would you do that?
Not now. It sounds a little premature to me. Apparently, they take 5 different poses of your eye, and I don't know. That's just a little too sci-fi and creepy for even for me. How about you, Lawrence? Are you going to do it?
I don't even like going to an optometrist.
I was going to say, I think Lawrence would agree with you, Senator. Thank you so much for taking the time to join us this morning. It was a pleasure.
It's nice to see both of you. Thanks so much.
That was Wyoming Senator Cynthia Lummis. That's it for First Mover today. Lawrence, thanks so much for hosting with me this morning. We'll see you tomorrow, same time, same place. You're watching CoinDesk TV.